Good day, traders. The 4-step method to high-performance trading and the free audio program, the 7-step daily routine for high-performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on inside days. A lot of questions regarding does the day count change? Do you count that as a reset? Lots of queries, and we're going to just clarify that. We're going to show some examples from this week. We're going to talk about some subtle variations. But the inside day can be an opportunity for a best trade setup. Now, it may not happen in the session that you're trading, but it may happen in the session that you're trading. And so it is a signal bar in the weekly template, day 1, day 2, day 3. And so very important to be cognizant of noticing when these present, because they are part of best trade setup opportunities. Sometimes you'll spot a subtle variation where it may just touch a border, but by all intensive purposes, it still has the same representation, which can follow up on the following day with a trade opportunity in the session that you're trading. We'll look at a couple examples of those as well. We can see explosive trend trades out of consolidation, so we can often see a measured move where the market will go into consolidation, form an inside day, and then continue in the direction of the original explosive move prior to the consolidation. Or we will also see more commonly, in many cases, a false break reversal where one side, typically it'll be on the front side at the high of the week, triggering inside bar traders along and then reversing, or we will see it trigger the low of the inside bar at the low of the week and reversing, trapping traders on the downside, chasing the trend, and then they're caught. And those moves can tend to be quite explosive or very strongly directionally based for the bulk of the entire session for very, very great opportunities in terms of the asymmetrical risk reward. So depending on the template, the week, the day, and the count, it can be a session trade or a larger move. So often, maybe typically on average, the daily move, the weekly inside bar reversal can coincide with a 2-day, possibly a 2-day reversal, and have a large move on the second day after the first day. So the first day reverses and gives a great opportunity from the inside bar, and the following day could be a large move as well. And that sometimes will tie in with news. If we see 3 weeks and an inside bar or heading into a new month, that can also be the beginning of a very large move as well. And we'll look at some examples of those. So again, I talk about grouping the US CAD, Swiss, and Japanese yen into one group. And just to show the difference, we'll zoom in on the CAD. No inside bar on the Canadian dollar. But on the Swiss franc and the Japanese yen, we had one such on each of those pairs. And so again, coming back to our day count, we have day 1. It sets the initial opening range for the week, the initial high-low for the week. And a great question from a trader, what types of trades can you find on day 1? We will talk about that in future videos, but Friday plays a large role in how Monday will trade. But talking about the inside bar, we see the range expansion, or the day 2 extends the range but comes back inside. And typically on a weekly low like this, I will extend the line across because the market is still respecting the low of the previous week as the low. So we have day 1, day 2. You've heard me say that 80% of the time, the Monday, Tuesday's high low will form the extremes for the week, and one of those will tend to hold. Day 2. So by the time Monday, Tuesday prints, you probably have your full range intact for the week. And what that means is that often you can get a day 1, day 2, day 3 setup off of the high or the low, or an inside bar, as we see in this particular case. Now, the inside bar in this particular case was on Wednesday. So day 1, day 2, day 3, we'll zoom in on this. So again, coming back to the day count never changes. Monday's day 1. Monday is day 1. And day 1, day 2. So we talked about the 3 pushes, setting up a great opportunity over the 3-day setup. So we have 3 session setups as we see 3 peaks on Monday, 1 push, 2 push, 3 pushes for the sell in the US session. That's an example of a Monday trade right there. But typically just talking about our 3 pushes over the 3-day setup, we have day 1, day 2. Day 2 extends the range on the downside before pulling back in. We had news on Wednesday. And that gave us an inside bar that went into consolidation. Now you've heard me say this several times. When a market goes sideways without taking out a low or a high, it's usually preparing for a larger move. So on day 4, after the inside bar, this is typically when I would look at my smaller time frames. Now, not being available to trade Asia or London in terms of the initial move, we can look at that chart. We have an inside bar. We know that it's highly possible we may have a setup on day 4 because we may see a break to one side or the other. So we have our inside day on the Wednesday, day 3, day 1, day 2, day 3. We've hit the low of the week. They've traded back down into the low. Now this is where it's important to know where your boundaries are. We have the previous day's low prior to the inside bar. They've traded down into that low without taking out the previous day's low and locked in that low and continued back in the long direction in the US window. Now we'll talk a bit more about this in coming videos as well, but the 4-hour high lows, we've gone into consolidation. We have our US session high heading into the close, and we have the most recent US session low. So again, coming back to some basic things, 3 things that markets do. They break out, they pull back, and they trend. They break out, they pull back and reverse, or they break out or not break out at all, and they just trade back and forth between a high and a low. So we have a market that in Asia extends the range. We continue to go higher before coming back inside of our initial consolidation that was set up from the close of the US session. The market then proceeds to auction down into the low at the Europe open window. When London opens, the market comes back up above the most recent lower high and begins to march in the long direction. We talk about front side, back side, but timing is key. So again, coming back to the equity market opening hours, 3 a.m. New York time. Now I know that London may be different because New York has had daylight savings. A lot of traders have asked me that. Regardless, I still focus on the 2 a.m. to 5 a.m. window as my window. And regardless of any of the hour difference, how people feel about that, what matters is what the price does. If you're down at the low of the day or you are at the high of the day and you're arguing about which time it's supposed to be, it's irrelevant. It's whether or not you actually have a setup. And that's the big thing to remember. Because they're never going to give you something at the same time every single day. So again, front side, back side, we get our equity market open. And then the market proceeds to go in the long direction, taking out the high of the inside bar. Now, this is certainly not a false break. If this was a false break at this stage, we would have a breakout pull on a reversal, which we will look at an example of, a couple of examples of that. But this is a great example of, again, just simple. A market's come out of the low of the week on an inside bar. They've traded down into the low of the week on an inside bar, gone into consolidation, gone higher in Asia without taking out the high of the inside bar. Remember what I said, they don't take it out. If they just broke that and reversed, we could possibly consider that to be a false break heading into the Europe-London window for maybe a reversal back down to the low of the week. We didn't get that. But what we did do is we saw a market that went front side in Asia and then broke structure and collapsed into the open of the Europe window, and they got traders shorting into the low of the day. London market opens, gives us our W reversal for a continuation in the long direction. So again, coming back to just geometry, we have a rectangle. You can get your own charts. You can mark them up. I know, it doesn't matter if you're using TradingView, MetaTrader. If you don't like my charts, just use your own charts. Just mark up your charts, high and low, rectangle. So coming back to that, if we have a breakout of our initial high-low from the Asian session and we get a range expansion out of that consolidation, we are looking at possibly 2 full expansions of the range. which the market does inevitably do. And again, that's not a Fibonacci tool. All it is 100% expansions of the range. You can just go in and change those numbers on your, if you're on MT4, I just punch in 100%. Very straightforward. Point I'm making is that in this particular case, we have a market now. Coming back to our longer time frame, because I know some traders don't like the 1 minute charts, but I do. We have an inside bar. We have a consolidation and a pin hammer on our hourly chart at the close of the London hour. We have an engulfment on our inside day that went down into the previous day and the low of the previous week. So again, we have an inside bar. We already have our pin to the low on day 2. We've gone upwards and consolidated above the low of the day on the current day 4. Excellent trend trade opportunity for traders trading the Europe-London window and into the US session. We now technically have a breakout of our consolidation, our initial balance, our rectangle at the low of the month, and currently are still above that rectangle. No idea what it could do, but we also could be in the midst of the beginning of a range expansion coming out of that consolidation down low. Don't know. We're talking about inside bars, and the big thing to remember with the inside bar, and sometimes you'll get a double inside bar, but remember we will either get, in most cases, a false break, reversal, or a trend trade. Trend trade coming out of a 1, 2, 3. So we've had 3 pushes down to the low of the week. We had a pin reversal, peak formation reversal on day 2 after news that possibly could be locking in our low of the week. We traded back into that peak formation low of the week level, the double zeros. We locked that in and came back up and went sideways in our 25 pip consolidation box. We broke higher in the Asian session before pulling back, locking in the low of the London window and trading back in the long direction. Inside bar, 100 pip trade opportunity. Now, obviously, you may not have held this. You might have taken 50. You may have saw the continuation opportunity headed into the U.S. window. Again, still on the front side. And we're on day 4. Going back to comparing the Canadian dollar with the Swiss franc, we have the inside bar on the Swiss franc. That would be a trigger for me to be paying attention to that pair, how it's trading. And when I come for the U.S. window, obviously we don't have a false break reversal. I'm on the front side of that move still. That's an easy opportunity perhaps to participate in that market coming out of that inside bar. We'll go over again, which I've talked about in previous videos, is that Monday high-low is our range, our high-low range. And if we have a range expansion, the market tried to break out on day 2, but we were unsuccessful. But if we do get a range expansion, it's more than likely in most cases we'll get a full expansion of the range on one side or the other of Monday's high-low. Now, not in every single case, but in the majority of cases, if the market is successful in a breakout, we will see at least full expansion of that range, which currently would take us up towards, at a minimum, that 95.70 level. Now, this is not a trade recommendation. This is something that would have been crossing my mind if I was entering this trade long on day 4. I would have been looking at a potential target of Monday's high-low range. As time ticks on and I haven't hit that target, if I am in that trade, my first objective to make sure that I get paid is that I would be looking at the next 2 full expansions level of the high-low of that day where the breakout took place. So again, 3 things markets do. They break out, they trend, they break out, they reverse, and they stay stuck in a trading range. This is just a textbook high-low rectangle and a range expansion for breakout trade that continued and gave 2 full expansions of the range. It doesn't mean I need to take it at that level. So obviously, if I'm in this trade long, even in the U.S. session, that would be an area that I would potentially look that this could fail. But as it's going stronger, then I know my next quarter level is possibly where this trade could fatigue based on the timing, the time of day, etc. Once it breaks structure, you could close the trade out. When we look at the Japanese yen, same thing. We have our high-low range on Monday. The market then breaks the low of Monday and the low of the week on day 2, pulls back inside and goes into consolidation on day 3. Day 1, day 2, day 3, inside bar. The market stays in a very tight consolidation before pinning down into the US session lows right at the open of the Europe-London window at 3 a.m. New York at the close of that candle. So heading into the third hour, we have a pin hammer. We haven't broken the low of the inside bar, but again, we've traded into the low of the week. The inside bar traded into the low of day 1. And then we get a pin hammer. That pin reaches down. That's a stop hunt down into the first mouse early level longs coming out of that day 3 trade, whatever that may be. But we're on day 4, and again, our thesis can be we're potentially now in an opportunity for an explosive move back to the high of the week. Now again, we did a video last week on identifying the consolidations. We have our US window that's gone into a nice tight, not quite 50 pip consolidation, but close enough between 25 and 75. The Asian range trades up into that, and again, you'll notice the bigger consolidation is the US high-low window itself from the previous day's range. That is our actual high and low. The market trades inside of that consolidation, breaks out in the Europe-London window. Now we have a breakout at the low of the US session. Once it breaks this lower 3-peak pattern, a reverse head and shoulders on a micro time frame, we'll zoom in. We have longs in the market in the London window. The second hour goes down and puts our low of the day in. So that is a reverse head and shoulders opportunity at the low of the day. We have the low now potentially locked in. We have our 1 bar stop. 1 bar stop is going to be 15 to 20 pips on the major pairs. And gold, oil, even on an explosive setup, I'd say 20, 25 max, because the thesis is that they shouldn't be coming back. So if there is any reverse auction into your trade entry, it's one of those situations where most likely I would cut the trade and reassess the whole situation. But our target now is obviously going to be the high of the day, the high of the week. The first area we can obviously see resistance is the high of the session. The next is obviously the high of the day, the high of the Asian range from the day itself. And then our next target would be, of course, the previous day's high. So again, we have a low of the day opportunity. We don't need to trigger the previous day's low. We're at the low of the session. We have our London entry for a move back to the high of the day, targeting the inside bar high. Day 1, day 2, day 3, inside bar on day 3, a low of the day trade back to the high of the week. The British pound also gave an inside bar. We had our day 1 Monday. Did not break any levels. We had 3 peaks and a potential low of the week locked in on day 1. We have day 1, day 2 breaking out on day 2. And then we get our day 3. So day 1, day 2 breaks out. Day 3 does not break out any higher. We get an inside bar. We get a third push on day 4. Day 4. So again, our inside bar is on day 3. Day 1, day 2 breaks out. Day 3 pushes higher but stays in a narrow consolidation inside the high of the week. Day 4 gives London traders a high of the day trade right off the bat on day 4. That day 3 inside bar on our third push doesn't quite have any juice left. We've run out of steam. Thesis is we should be able to have a nice explosive short trade back at least to the low of the day, and on a great one, obviously take right out the low of the week. We didn't get there. We got to the low of the rollover of the US window on day 2. Let's take a closer look at that. So the inside bar, remember, is our trigger. That's our trigger. We come to the screen when we know we have an opportunity. The inside bar is a trigger that we may be now turning on the back side. Day 1, day 2, day 3. That's the front side of the move. Day 3 is on the back side, possibly, potentially, maybe heading towards the back side. We've run out of juice going higher. Our real consolidation is the London high and the US low. We come right back up there in the London window, right up to the high of the day from the previous day on the front side of that explosive vertical move heading into the London session. We take out the high before reversing with our M structure, and we get a parabolic setup. So for traders who have asked which opportunities are scalable, when you get a parabolic setup, and a parabolic setup is going to show up in different forms. This is one of them. It starts to run. You can add positions because once this explodes, it will take off. And the minimum distance will usually be the high-low of that range at a minimum. But we're targeting the low of the previous day. We have two full expansions, not quite hit, but almost there. And again, I'm not greedy. Once I'm in a trade for a certain length of time, I start paying attention to the clock, and I will take the money off the table. So we could have several ways of doing that. We could just take the money. We can get back in. We can average out of that trade, taking a bulk of the portion off and leaving a runner, whatever that may be. But the inside bar is broken. The high is broken on day 4 at the high of the week. So we're at the high. They haven't taken out the high of the week, but we've gone on our 4th day back to the high of the day on an inside bar. That is the textbook reversal opportunity. They trigger inside bar traders long and immediately lock in the high in the London hour. Starts to fade. We've got our entry anywhere underneath of that breakout. So we've got our 3 push pattern, our M structure. First mouse might have gone in on the break of our trend line. As soon as they're underneath back inside, I'd be getting in this market. As this trade goes into the falling wedge in the parabolic setup, I would be adding more, locking these other positions in at break even, adjusting stop to above the quarter level peak of that falling wedge. Excellent opportunity for an explosive parabolic trade. The inside bar high of the day, false break on day 4. Day 1, day 2, day 3, inside bar. They pull back, they bring it back and trigger the high of the inside bar, locking it in and falling away. We didn't get that on the euro, but we did get the inside bar. We had day 1, day 2, day 3, inside bar. But we did get the Batman formation, and they went back to the high of the day in the Europe window for the short trade, again back down to the low of the inside bar. So in this particular case, we did not trigger the high of the inside bar, which is again just, we don't know what the market's going to do. But we did get a high of the day opportunity in the Europe London Open after our trigger day, the inside bar. I go back, I draw my consolidation. They might have blown through my consolidation, but they don't. They come up there at the beginning of the London session. We have a high and a low from the US window. We stay inside of that in the Asian session. We're on the front side headed up to the high of the day. They pin up into the high of the consolidation before breaking down on the backside for a short trade opportunity back down through the low of the inside bar. Not quite the same explosive large move as the pound, but again a low stress inside bar high of the day opportunity at the the Europe London window. You can go look at all kinds of different examples, but part of the template, this can be used to our advantage. We had an inside bar by all technical purposes on day 1 on the Dow. Day 1, inside bar. Day 2 goes up to the high of the day. Just triggers the high of the day, again triggering longs potentially, and then immediately reverses back down not only through the low of day 1, but back through the low of Friday. Inside bar traders get triggered. The stop hunt should go at least to the other side. We get another inside bar on day 3. Day 3, inside bar. Day 1, day 2, day 3, we have an inside bar. We get a high a day sell opportunity right at the London Open again, back to the low of the week. Day 1, day 2, day 3. Day 4 comes back from the low of the week, goes into consolidation. You'll notice that it pulled up sideways inside of that low. From the breakout of the inside bar, that's a dead giveaway. They came back inside of the breakout of the inside bar, a dead giveaway now. They're going to target the upside because, again, follow the money. Inside bar breakout that fails goes into consolidation inside of the range of the inside bar. The most likely target, again, right at the London Open, straight up. vertical move back to the high of the previous day. We know there are stops up there, traders in the money. Inside bars are powerful trigger opportunities. You may not get it in your session. You might come later, but you may have a thesis in that session to either continue with that trend trade or that the reversal is locked in, and you may have an explosive move back up into traders who are short. False break reversal. But inside days can be powerful, powerful signals for parabolic best trade setup opportunities. Hopefully you got value out of that today, traders. 1% better. We're going to get a 5-day template again this week. We're going to have some session trades. We're going to have some parabolic opportunities. Consolidations are where the big explosive trades come out of. Have a great weekend, and may the markets go with you.